News Radio 840 WHAS. Good Sunday morning. Bob Sokoler, the Louisville Real Estate Show, here with you till the top of the hour. A lot of stuff to get to. Let's go right into it. First, let's introduce the folks who are joining us. Chuck Crosby, the Crosby Law Offices. And you can reach Chuck and his team at 499-6360. Also here is Randy Rocky, Swan Financial. They do a great job getting your loan ready to close. Of course, Chuck does the closing for it, does a great job. You can reach Randy and his group at 6450736. Son Greg is off this morning, and you can reach me. We've got quite a team, but for listing and selling your home, all you need to do is pick up a phone, call me, 376-5483. That's Bob Sokoler. 376-5483, or you can go to sellmyhomebob.com. That'll get you to the form to fill out. All right, so right up top, so Chuck, Randy, don't laugh. We talk about a lot of questions that come in from our listeners. Now it's one that's coming in from me. So remember the storm a week and a half ago that really was heavy? Well, the storm took down a branch that was attached to a neighbor's tree. The branch, a large one, came down, probably the size of a tree. That's how big the branch was. And right on top of my aluminum fence, wiped it out. So in communication with my neighbor, and, you know, it's been a somewhat tense situation because the neighbor wasn't so thrilled about the German Shepherd dogs. And so we had what?
You had made up with them.
Yes, and I went one step further. So the power was out in the neighborhood. So I offered him, I said, listen, feel free, go to the front porch, plug into my power because I've got the generator running, and feel free to do that anytime. So that, I think, went a long way to cement the relationship. But anyway, so I got one of my crews out to get rid of the branch, which was a major job. And then the next day, we had another crew come out to put a fence in, a wood fence. So now I'm faced with this really odd and unusual circumstance that a lot of our listeners deal with is, how do you talk to your neighbor about, okay, is your insurance company going to cover the costs? What do I need to provide? How do I approach this? I mean, the good carrying over a cheesecake or a chocolate cake, I don't know that's going to cut it. So I thought, okay, this is a good topic, Chuck. For anybody who's had damage from a neighbor, how do you broach this without destroying a relationship with a neighbor?
Well, you would if you bumped into each other's cars. Just say, hey, your tree fell on my fence, obviously. I'm going to put this in for an insurance claim. And then I believe the insurance folks do the rest, do they not? Have you?
So I emailed my insurance guy, and here's the thing that I'm concerned about, and then you're not an insurance guy, but my concern is that if I go and send it to my insurance guy, he then is going to have to subrogate against the neighbor's insurance guy. But does that go against me because it's an initial claim that I made? And does my rate, does our as homeowners, our rates go up?
That's a discussion with your insurance
company. Yeah. Okay.
Yeah. I mean, I've submitted insurance on issues where other people were at fault, and I didn't get any raises in rates or anything like that.
Okay. Well, certainly, if you're an insurance guy or lady, we'd love to hear from you, your thoughts on this. Should homeowners who suffer a loss, and specifically from a neighbor, what would the best path be from an insurance standpoint? Yeah, go ahead, Joe.
From the legal standpoint, obviously you can talk to them and have them submit the claim themselves, or just pay for it, or whatever they choose. But if you don't tell your insurance company within a fairly recent or within a fairly small window of, and then it turns out their insurance company says, nah, we're not going to take care of it, well, then you might be out of luck altogether.
Yep. All right. Well, that makes sense. So this is a good conversation, not only for me, but for all of our listeners. So and just so you know, folks, the moment it happened, I got pictures of the damage, and I sent that along with a quick note to my insurance guy via text. So he was aware of it. I haven't touched base with him, but obviously Chuck's point is don't let it go for a couple of weeks before notifying your insurance guy or lady, because it could be detrimental to the case against getting a claim in. All right, let's go to Randy. Jan writes in. She has a lot of equity in her home, and she wants to tap into it for a vacation or a couple of home repairs. So this is kind of an interesting question. So she's got equity. A lot of us have equity in our homes, but she just wants maybe $10,000 that she could tap into it and provide herself with a vacation and also do home repairs. But she says she's finding it difficult taking a small loan as a home equity loan, HELOC in the business, against her home. Should that be difficult, or is it she's just dealing with the wrong people, Randy?
I think she's dealing with the wrong people. Now, there might be somebody there might be some home equity companies that say, hey, you got to at least take a $25,000 line of credit out. It doesn't cost her anything. And she could call me about that, and I have no problem helping her. But again, it doesn't cost her anything if she only takes $10,000 out on it, and her home equity line is set up for $25,000, $30,000, $50,000 if that's what they require. Now, there are some home equity companies that will do a $25,000 home equity line of credit. So if she needs to call me, tell her to, she can just call me and I'll take care of that and help her with it. But I do not do home equities. But
I got it. You'll send her people who do. Got it. So that may have been a misinterpretation of what Jan was thinking, that she has to take out a $25,000 loan, but she really doesn't. She just open up the credit line for $25,000 and only take $10,000 to do repairs and take a little vacation, if that's the case.
Right. And this is something that, it's funny you hit on this topic, because I tell a lot of people, if you don't own anything on your home, go ahead. There's no cost. Get you a $200,000 or $300,000 home equity line of credit. Well, here's the reason why. What if something comes up as an emergency? I doubt there will be. But then you always have that security blanket. That is your security blanket. So I recommend that to anyone when they have their house paid off. Get the home equity line of credit. It doesn't hurt, doesn't cost you anything, and I definitely have one on my house.
Gotcha.
So I think it's a good thing to do.
So, Jan, we'll be giving out Randy's number again a little bit later, so just hang on for that, and you can give him a call. Chuck, Samantha wrote us telling us that she's selling her house. In fact, it's under contract, and it's expected to close in about 30 days. The buyer of her house purchased new appliances and is asking Samantha if those appliances could be delivered next week. That's a couple of weeks before they actually close on the house. And Samantha's saying, hey, I don't want this new buyer's things in my house. I don't want them in my garage. I'm using my garage to pack boxes and for storage. Does the buyer have the right to put items in her home, or even ask to put?
Nope. Well, he has the right to ask.
Yeah.
He has the right to say no. She can either say yes or no, but it sounds like no is what she's going to say. If you always have some liability when you're holding other person's property. What if they get damaged? What if, that sort of thing.
So let's take this on a little different tack, because there are a lot of people out there right now who are selling their homes, and maybe the buyer needs a little help with storing some things that they're getting delivered, things like that. So if Samantha, let's just change the tact on this a little bit. Let's just think Samantha says, yeah, okay, I'll let her put the stuff in the guy or in the garage. What should the seller get from the buyer to protect the seller against any damages that could incur against anything that's delivered or being held in the house or in a garage until the buyer takes legal possession of the house?
Yeah, well, you've got a couple of issues going on here. First off, you can always do a hold harmless, something that says I'm going to, from the buyer saying I'll indemnify the seller against any damage, yada, yada, yada. But I think that's got its limits, because there's going to be exceptions. What if, she decides to throw a crazy party and a bunch of sophomores in college do crazy things with the whatever, not something that you would normally foresee. Mm-hmm. she could end up being liable for that sort of thing. The other issue that it raises is you now have a tenant. What if it doesn't close? What if they want to keep storing stuff there? Well, you very well may have just entered into a lease. And indemnity or not, if it doesn't close and they don't come and pick up their stuff, you may be liable for taking care of it for a good deal longer.
You couldn't just sell it, Chuck, if that was the case?
Sell it like that. I would not suggest that.
No. Okay. All right. I got it. Well, you never know. So, okay. So this is good information because there are a lot of people who maybe are not in the situation where Samantha is, that she doesn't want anything in. She's someone who's willing to help the buyer, but you need to protect yourself. Now, we're told as real estate agents, Chuck, do not write something up legally that it's out of our expertise, our pay grade, so to speak. Yeah.
Forms. You're not allowed to do anything except what's on the forms. That is the one limited area you're allowed to write contracts. So just get an attorney to draw that stuff up.
Yeah, and there are some forms on our board that we're able to use that we just populate with. But I think it's always safer. I'm a big believer that it's always safer to go to a guy like Chuck, who is gracious and always helps us and helps a lot of realtors and homeowners throughout our area. So we'll give out Chuck's number again, just in case you want to give him a call and follow up on that. We're going to take a break. Just a reminder that if you want to see a copy of this radio show, we actually, because it's Zoom, we take your questions via email. You send me a email, bob@wesellouisville.com, and then in the subject line say radio question, and then the subject and the body of the email, just tell me what the problem is, the question, and we'll get it on the air. And then we record these and we put these up onto Zoom and then up onto YouTube. So the YouTube channel, if you want to check, is LouisvilleAnswers.com. That's LouisvilleAnswers.com. If you also want to get in contact with me to come out and help you come up with a plan for listing, selling your home, you can reach me on my cell phone anytime at 376-5483, or you send me an email or go to the website, bobsellmyhome.com. Here with us today, of course, Chuck Crosby, the Crosby Law Offices at 499-6360. Randy Rocky, Swan Financial, 6450736, and son Greg has the morning off. We're back in a moment on News Radio 840 WHAS. News Radio 840 WHAS, the Louisville Real Estate Show, here with you until the top of the hour. I'm Bob Sokoler. Thank you, Barbara Corcoran, for your support and all the work you do, and also great job on Shark Tank. If you haven't seen that on ABC or CNBC, what they do, the repeats, it's always a good hour of entertainment. And with us this hour, a half hour heading up to the top of the hour, Chuck Crosby, the Crosby Law Offices at 499-6360, and Randy Rocky, Swan Financial, 6450736. He's over at Swan. They do a great job getting the loan together to get you closed, and then Chuck does a great job at getting the loan actually closed at the closing table. And you can reach me, Bob Sokoler, at 376-5483. All right, Randy, question for you. Graham, shopping for a new home, and he remembers something about high interest rates from years in the past. So listen, we're all faced with interest rates. We have no idea where they're going to be going, though we should point out the Fed says short-term rates are thinking of upping the 50 basis points to 75 basis points coming in July. But Graham is saying he remembers paying mortgage points years ago, and he's wondering if you can explain what mortgage points are and how do they actually relate to buying down the points that you would pay. Let's say it's a 5 or 6 or 7% interest rate. How does that work, Randy?
Sure. So you take a $300,000 loan, and let's say it costs, you're buying it down, and it costs 1.5 points, which is $4,500. So what we do at Swan is we evaluate it. Okay, how long you're going to be in the house, how much you're saving in interest monthly, and see what your break even is on buying down interest rates. And in some scenarios, it actually makes sense. Most scenarios it doesn't, but some scenarios it does. So that's how we break the mortgage, the buy down. And yes, there are ways are being creative now, adjustable rate mortgages now. There's all kinds of different things we look at as this rate environment goes up.
So can you correlate for us, what does a point mean in terms of buying down the mortgage?
Yes, it's 1%. So 1% of 300,000 is $3,000.
Okay, so that's 1 point.
Equivalent to a point.
So
yes, sir.
So you would pay $3,000 basically up front, and it would reduce your mortgage by interest by 1 full point, or is it a portion of that?
No, just a portion. It could be a quarter of a point, an eighth of a point, a half a point, and that's what we look at is how much but it's a percentage of wise. 1.5 points is 1.5%. 2 points is 2% of the mortgage amount. So 300,000, that would be a $6,000 buy down. So, and then we break it down to you. Okay, this is what it's costing you. This is your recovery time on what it cost you.
I think it's important that we point out that paying points is a helpful tool. It may not be the tool for you, but know that that's available, as Randy mentioned, the adjustable rate mortgage. That's also an important tool that you now want to consider. Even though the rates are up and may go up higher or may come back down, this is not the time to say, okay, I'm not going to buy a home because the rates are a little higher. You can always refinance if the rates come down. Remember that.
So we just put you on a rate watch and then we do a refinance.
Gotcha. All right. So you're not necessarily locked into a higher rate if rates do in fact come down. All right. Moving forward,
right.
Chuck, Alex is a renter and his lease ends at the end of this coming month. I guess it's the end of July. He writes us that he's paid until the end of the month and he's planning to use every bit of to the very last day of the month to move into a new house that he's purchasing. The landlord is attempting to force Alex out of the apartment before the end of the lease because he has new tenants that want to move in mid-month. And he's wondering, is that even legally possible? Does the landlord have any reason to push him out?
Well, don't know about reason, but he doesn't have any recourse. Leases to a specified day. If he's not in breach of the lease, then the landlord can't make him get out a moment earlier.
Do they have legal recourse, or can they go somewhere to get help?
Well, legal recourse, it depends on the reason he's pushing him out. You indicated maybe he was trying to get some people in. No, recourse comes with damage. The landlord's not able to get him out. He doesn't have there's no law, no rights, etc., to get him out if he's not in breach of the lease. So as long as he stays, there's not going to be any damage. So not really any recourse. He can just tell the landlord no.
Chuck, Sammy, and his brother were given 40 acres of land by an uncle back in 2008. They had the land surveyed, and they were splitting the land into two 20-acre parcels. Now, Sammy is wondering, can he write up a document or get a document online that spells out the division of the 20 acres each? Is there something he can do?
That's kind of a bad idea. First off, do the survey, but it depends on what county it's in. There's a lot of counties that you actually have to go through do a minor plat in subdivision. Jefferson, Oldham, counties like that. You have to actually go to planning and zoning, submit the survey to them, have them approve it, and then you put the property up. Since 6/6 of 66, you can't just write a deed and say, okay, you can have half the property. Now, there's still a few counties in Kentucky where you can do that, but not all of them. So going to an attorney on this one is essential.
Got it. So, Sammy, this is important for you to take this into account. We have another question coming in. Bill and Barbara moved into their home, Chuck, back in 2017. They sent me an email saying that their homeowner association just imposed restrictions for leasing a home. Apparently, there was a vote of the board, and the board decided to prevent residents in the community from leasing their homes. Couple is wondering, this is Barbara and Bill wondering, can the HOA actually prevent them from leasing their home? since they've owned it before the new regulation went into effect?
Now, it's going to depend on what the restrictions and bylaws say, but I would suspect no, that they can't, the board just can't arbitrarily say, okay, no more renters.
The date it was approved going forward.
Yeah, if they have the right to do that restriction, it wouldn't be retroactive necessarily. But my bet is that their HOA just doesn't allow the board to do that. That would be more of an entire community vote. You'd have to have a certain number of actual residents to vote on that particular type of issue. There's a difference between, paying the bills for the lawn guys and changing the terms of the underlying master deed. I suspect there's a few toeholds you have on that one.
So would you suggest that Barbara and Bill go to an attorney to review?
Absolutely.
Yeah.
Absolutely.
So let me ask you this, Chuck, and this is touchy, but I talk to a lot of people who deal with homeowner associations in a variety of ways, and they're not happy with some of the regulations. What would you suggest to anybody, whether it's a condo or a community of housing, single-family homes? What should you do if you're not happy with the way the board has been elected? Yeah.
Homeowners association. It's not a government. It's not a dictatorship. You vote in the folks that are that sit on the board. It's not, they don't just stay there forever. So get your neighbors together, vote them out. They have to have a number of public meetings each year. You ought to be able to go to each of the board meetings themselves. And if not, well, it sounds to me like maybe somebody should get an attorney and have them look into it.
This is not something that you do, but you would know of somebody who would. Yeah. I can't begin to tell you how many people will, it's a good thing having an HOA, but sometimes they go over the line a little bit. I think
there are.
Degree. Yeah.
You technically, when you get your deed, it's a contract, okay? And the contract is subject to the master deed and the bylaws. And if you have an HOA board that is running amok, well, and that happens, well, that's one thing, but you have to follow the master deed, you have to follow the bylaws, and something that ownership related sounds to me like in most situations would have had to have been a vote by the entire HOA, not the board.
Mm-hmm. Got it.
It'd be nice if, I'm on a board. It'd be nice if I had that kind of power, but I don't think we do.
Moving forward here, Randy, Olivia's thinking of buying a home, giving up her apartment. She's wondering, as a first-time home buyer, how much money does she actually need to be able to buy a home?
Well, we have as little as zero money down. Obviously, those rates are higher. But she doesn't really have to have any money to buy a home.
How about credit rating? Let's look at first-time home buyers now, who maybe people are renting. What should a credit rating be?
We can go as low as 580. But if you're above 620, then it's a whole lot easier situation to get somebody into a home.
Above 620, okay. And there are different types of loans. Is there one type of, is FHA better for a first-time home buyer, even though sellers don't like working with FHA, as compared to a conventional loan?
Well, under 680, yes, 680 credit score. Above a 680 credit score, conventional, because you can do a 3% down. In that scenario, if they have that available, then we can get them in a 3% or even a zero money down in certain situations. So 680 and above conventional, below 680 FHA is more advantageous.
And finally on this point, so let's just look at it from an overall standpoint. There are people who are listening who want to buy their first home. How much money, and let's just use a $200,000 home as an example. How much money should they have on hand? Even if they're going to go zero money down, they still have to have money, cash for down payment and a variety of things, how much should they have in their pocket to be able to purchase their first home?
Well, I think on a $200,000 home, you really want to at least, $10,000 to $15,000 in savings or somewhere where you could access it if needed.
Okay, and that you can borrow that money from family if you don't have it in your pocket. Is that right, Brandy?
That is right. You can get funds from family. Yes.
Got it. Yeah,
and sometimes even your company you work for. Yeah.
They'll loan you money. All right. As we wrap up, a reminder: next week's show, we had a listener write in that's worried that the deed to his home could be stolen. And we've talked about this in past shows, just briefly, but we're going to go into it a little more in depth, because especially since we're seeing these ads on some of these late night TV shows, hey, protect your deed. I think this is what precipitated this email. I'll read the email. I'm not going to give the names of the people who wrote it because we protect their the confidentiality. But I think it's an important topic that we need to discuss that we're going to bring up on next week's show. Are you safe with the deed, and could it be taken out from underneath you without you knowing it? My thanks to our folks who are with us, Chuck Crosby, the Crosby Law Offices. You can reach Chuck for not only closing your loan, but for wills. And as Chuck will tell you, if he doesn't do it, he knows somebody who does a great job doing it. And you can reach Chuck at 499-6360. Also, Randy Rocky, who's actually on the road this Sunday morning, Swan Financial, 645-0736. Thank you guys for being with us this morning.
Thank you, Bob.
And you can reach me anytime if you have a question getting your home on the market. It's pretty simple. We'll come out, we'll talk about what the process is, what the home is worth, what the prospects are for getting the home sold quickly or on your time frame. And you can reach out to me anytime, especially as soon as the show's over, at 502-376-5483, or you can go to bobsellmyhome.com. We are out of time. We'll see you next Sunday right here on News Radio 840 WHAS.